Hi, welcome back to the channel. So Bitcoin is something that has been gaining a lot of popularity in the last few years. Back in 2013, the total market cap of Bitcoin was roughly around $5 billion. Fast forward to 2017, Bitcoin now has a total market cap of around 200 billion US dollars. There's been a lot of debate as to what exactly could Bitcoin be classified as. Is it a store of wealth? Is it a method to transfer money? Is it something that could be used for money laundering? Is it digital gold? Is it a scam? Or could it actually be the future world currency? Studying the history of money, the closest association that I could find to Bitcoin is actually rice stones. Rice stones is an ancient form of currency that was used on an island where giant stone discs were used as symbolic forms of money. The stones itself weren't transferred, but the ownership of the stones was transferred. This is how I view Bitcoin, where let's call it currency for now, where the currency is stored on a trust-based distributed ledger, and the ownership is granted to either individuals or entities through the mining of blocks or the transfer of the data. I don't believe that Bitcoin itself has an intrinsic value. Like gold, its worth is determined by what the next person who wants to buy it is willing to pay for it. So, due to the speculative nature of such assets, it is subject to the bubbles and the crashes. However, due to the structure and the design of how Bitcoin is, it's an infinitely hard currency. The total energy that's going to be required to mine the last few Bitcoin is going to be magnitudes higher than what was required to mine the first few million Bitcoin. The cap at 21 million makes it such that no matter how much more money is invested into mining Bitcoin, the actual number of Bitcoins in the world is not going to increase. The finite supply, coupled with the increased demand, would lead to an increased price. However, this is completely just speculation. We don't actually know what the demand for Bitcoin will be in maybe 5 or 10 years. However, it's come up that publicly listed companies have now started buying Bitcoin. Square was the first publicly listed company to announce that they're buying $50 million worth of Bitcoin, since it aligns with the goals of the company. In a white paper that Square released, the company stated that given the rapid evolution of cryptocurrency and unprecedented uncertainty from macroeconomic and currency regime perspective, they believe that right now is the right time for them to expand their largely USD denominated balance sheet and make a meaningful investment into Bitcoin. Square CEO Jack Dorsey has been a very vocal supporter of Bitcoin for some time now. He believes that it could be the currency of the internet in the future. He's even allowed users of this Cash App that Square has to transact using Bitcoin. I don't see any reason why Square wouldn't want to purchase more and more Bitcoin or maybe some other altcoin in the future. Another publicly listed company called MicroStrategy recently came out and announced that they will purchase approximately $425 million worth of Bitcoin. The decision was taken by the company's CEO, Michael Saylor, and his reason for buying the $425 million worth of Bitcoin is that cash that's sitting in the bank account of the company is yielding a negative real yield. This is largely due to interest rates staying at zero, along with trillions being pumped into the economy. Saylor stated that monetary supply over the last decade had expanded by around 7%. Inflation on equities was at around 7 to 8%. On long bonds, it's actually 22%. Moving forward, the cost of capital will at least be 10%. And the $500 million that MicroStrategy has in their bank account is earning a negligible rate of return. It's almost at 0%. It's essentially losing value due to inflation. The real yield on this $500 million would be a negative 10%. The reason that Saylor decided to buy Bitcoin over, say, gold is that there is a limit as to how much Bitcoin can be produced, which may not be the case for gold. If the price of gold gets high enough, gold miners will have an incentive to discover new ways to extract more gold, similar to what happened with fracking in the oil industry when oil hit over $100 a barrel. It's the finite nature of Bitcoin and its ability to be liquidated into any currency at any time is what got Saylor believing that it's a safer store of value for his company's cash reserve. Right now, sovereign wealth funds, passive funds indirectly actually own some Bitcoin, as Square and MicroStrategy are both included in many of the broadly diversified passive funds. So if you follow a passive investing strategy, you are now exposed to Bitcoin. From a value investing perspective, Bitcoin has no intrinsic value. Its value is similar to gold, as what I had mentioned before. It's determined by what the next person who's willing to buy it is okay with paying for it. Now, for me, as someone who buys into individual companies, it's not really favorable to see a company buying Bitcoin with their cash. I would rather see the cash be used to do maybe buybacks or be paid out as dividends, so shareholders can decide what they want to do with the cash if the company doesn't have any better use for it. The purpose of a company is to be able to grow their earnings over time. If the money isn't being reinvested into future projects, then buying Bitcoin as a store of value for the company's reserves without having an adequate use for those reserves in the future makes absolutely no sense. If a company like Square is able to generate value for its shareholders by improving maybe transactions or payment gateways, then it makes a lot of sense for them to hold Bitcoin and invest in Bitcoin. This is just my opinion on the topic. Let me know if you've got a different perspective on this. I'm quite certain that, diehard believers of Bitcoin will have something to say in the comments. So hope you liked the video, and thank you for watching.